Hello friends, welcome back to our channel. We are going to discuss about tomorrow's morning resistance and support lines for October 14th. So in the analysis we are breaking down the Nifty 50, which as you can see on the screen is currently trading at 25,237.15, down about 58 points or 0.23%. The price action is caught in a clear consolidation zone, and the key for any future move, whether a breakout or a breakdown, lies in understanding the critical support and resistance levels we have identified. And in this video, we are going to deep dive into the stacked resistance and support zones for Nifty. We'll discuss what the current price is telling us, identify the key levels you need to watch for your trading and investing decisions, and outline potential scenarios for the sessions ahead. So let's get straight into it. So looking at the chart, the immediate battle is happening right around the corner spot price. The sell level is marked at 25,227 and the buy level is at just a few points above it. This tells us that the market is in a state of indecision. A sustained move above this consolidation could trigger bullish momentum, while a breakdown below could invite further selling. The immediate hurdle on the upside is the R1 level at 25,307. This is the first gate the bulls need to unlock. If the index can conquer this, we can expect a move towards more significant resistance. On the flip side, the immediate cushion for any dip is the S1 level at 25,132. A break below S1 would signal that the sellers are gaining the upper hand and would likely push the index down to test stronger support zones. Essentially, the range between 25,132, which is S1, and 25,307, the R1, is our immediate intraday battlegrounds. So, getting into resistance ladder, now let's talk about the path of least resistance on the upside. The resistance levels are stacked quite densely, which suggests that any rally will likely face multiple hurdles. R1 at 25,307 is our first target. Clearing this round could lead to a push towards R2 at 25,387. But the real test for the bulls begins at the R3 level of 25,487. This is a major psychological and technical barrier. A decisive break above R3 could create a strong bullish signal, and market may go completely bullish. Beyond that, we have significant cluster of resistance R4 at 25,645 and just above it R5 at 25,663. This tight zone between 25,645 and 25,663 is a critical supply zone. If the index managed to power through this, the next major target becomes R6 at 25,661. Wait, let me correct that. The chart shows R6 at 25,661, but it's very close to R5, confirming that this is a massive wall. And finally, looking at the bigger picture, the 25,800 and 25,900 levels are the major swing highs that represent the ultimate bullish targets for this setup. Reaching there would require a very strong, sustained buying effort. And coming to the support side, on the downside, the support structure is what will protect the market from a deeper correction. As I mentioned, S1 at 25,132 is the first line of defense. If that gives way, the next critical support is at S2 at 25,042. A break below S2 would be a bearish development, opening the doors for a fall towards S3 at 24,952. Now, if broader market sentiment turns negative, we could see a test of the S4 level at 24,850. For any major bearish trend to be confirmed, the index would need to break and sustain below the S5 and S6 levels at 24,757 and 24,667 respectively. These lower supports around 24,600 to 24,700 generally represent a much deeper correction and would likely coincide with very negative global or domestic cues. So putting it all together, our trading scenarios. So let's synthesize this into actionable scenarios for tomorrow. Like if we get into a bullish scenario, for the bulls to regain control, they need to defend the 25,012, which is S1 level, and then push the index about 25,307, which is R1. The confirmation of a strong bullish move would be a sustained break about 25,487, which is R3, and targeting 25,645 to 25,663, which is R4 or R5. Bearish scenario development, like for the base to take charge, they need to drag the index below the 25,132, which is S1 support. The first sign of weakness would be a break below 25,042, which is S2. If the next major target at 24,952, which is S3. Now coming to the consolidation, for a neutral or range bound scenario tomorrow, the most likely scenario in the near term is continued consolidation between 25,042 and 25,487, which is like S2 and R3. Traders can look for opportunities at these extremes. So, final conclusion is like the Nifty is at a crucial junction. The dense cluster of resistance levels above suggests that upside moves may be very hardly fought. However, a strong layer of support below provides a cushion against any sharp declines. Your key levels to watch are 25,132 on the downside and 25,307 and 25,487 on upside. Remember, these levels are dynamic. Always wait for price confirmation, a candle close beyond a level before taking a trade. Combine this with your own risk management and market news. So that's it. If you found this analysis helpful, please give the video a thumbs up, subscribe to the channel for daily market insights, and hit the notification bell so you don't miss our updates. Let us know in the comments which level you think will hold tomorrow. Thank you for watching. See you tomorrow morning.